In the photograph, a visibly satisfied American soldier is sitting on a mountain of gold bars. How much gold is actually lying in front of him cannot be determined with certainty, because in May 2003, 2 trucks carrying such cargo were intercepted. The first discovery dates to May 23rd. Near the Syrian-Iraqi border, American soldiers stopped an old Mercedes truck and found beneath several sheets 2,000 bars weighing 18 kilograms each. Altogether, that amounted to 36 tons of gold, whose value at the time, depending on its purity, was said to be approximately $500 million. 3 days later, on May 26th, another truck was inspected near Kirkuk. It contained 999 lower-quality bars with a combined value of about $100 million. In both cases, the scene was similar: a roadblock, a routine inspection, an aging truck, a few lengths of cloth hastily thrown over the cargo, and underneath them suddenly a small private reserve that would normally have belonged on the balance sheet of a central bank. One of the drivers said that he had believed he was transporting scrap copper and had been paid $300 for the job. An astonishingly modest fee for cargo worth several hundred million. It would have been no less astonishing if the number of bars had undergone a remarkable slimming program on the journey from the roadblock to the military base, then to the aircraft, and finally to its destination. On March 20th, 2003, troops of the United States invaded Iraq. Baghdad fell on April 9th, and by May the large-scale distribution of what remained of an extraordinarily wealthy country had already begun. It was never clear who had originally owned the gold in the 2 trucks. The bars appeared to have been cast not industrially but in makeshift conditions. Someone had therefore melted down jewelry, coins, or other valuables in great haste, possibly while the bombing was still underway. For that reason alone, no one could say how much gold had existed at the beginning and how much disappeared along the way. It is even harder today to calculate reliably how much wealth Iraq lost in total through war, looting, corruption, and occupation administration. Yet the most important stages of this story at least allow a comparison. How much Saddam Hussein and his circle appropriated, how much vanished within the structures of the United Nations, how much disappeared under American administration, and what share was later secured by Iraq's new elites. The collective grab for Iraqi wealth had not begun with the invasion. As early as 1990, Saddam Hussein's regime was subjected to severe international sanctions after the invasion of Kuwait. The campaign failed, and Iraq was subsequently accused, among other things, of running programs to develop weapons of mass destruction. Such weapons were later not found. Until 1996, Iraq was practically prohibited from exporting oil. The United Nations then allowed the country to sell oil in order to buy food and medicine. The program carried the sober name Oil for Food, known in German as Öl gegen Lebensmittel. In principle, the measure was necessary. Around 60% of the roughly 26 million Iraqis living in the country at the time were so severely affected by the sanctions that, without food imports, a humanitarian catastrophe threatened. Under the program, Iraqi oil worth more than $60 billion was sold. About 1/4 of the revenue was diverted as reparations for the lost war. The United Nations retained a further $1.2 billion for its own operating costs. The search for the non-existent weapons of mass destruction was also financed from this fund. The remaining portion was actually supposed to pay for food and medicine for the starving and sick population. On paper, this sounded reasonable. In practice, Iraqi bureaucrats purchased food at grotesquely inflated prices, while the difference was divided between Iraqi officials and United Nations employees. At times, the humanitarian shipment existed only in the paperwork. Instead of usable food, spoiled or inferior products arrived on the ground. Allegations of corruption were raised in numerous countries, from the United States to Norway. There were also cases that seemed almost satirical. The United Nations, for example, sent 193 highly paid specialists to Iraq to improve the electricity supply. Each of them received at least $15,000 a month. If Iraqi households then received 3 hours of electricity a day, that was already regarded as a remarkable success. According to people directly involved in the program, only about 60 to 65% of the funds provided reached the Iraqi population. The remaining 35%, billions of dollars, disappeared along the way. An organization can hardly be considered insignificant when it moves sums of that size, and in the end, not even meaningful criminal consequences follow. The exact damage can no longer be established. If even the United Nations auditors were either unable or unwilling to determine it, only a cautious estimate remains. Even by a very conservative calculation, at least $10 billion were probably lost or diverted from their intended purpose. Until 2001, Iraq's oil revenues from the program did not flow directly to Iraq, but into so-called trust accounts at the major French bank, BNP Paribas. At the beginning of the new millennium, one of the bank's largest private shareholders was the British businessman Nadmi Auchi, a billionaire, philanthropist, and founder of an Anglo-Arab friendship society. His public profile, however, also included another well-known affair. He received a suspended sentence of 15 months after a system of bribe payments worth hundreds of millions of pounds was uncovered in Europe. Payment was made not only in money but also in jewelry, works of art, and exclusive properties. This personal connection proves nothing by itself about the Iraqi trust accounts, but it gives a fairly clear impression of the financial environment in which such arrangements operated. Saddam Hussein himself did not live modestly either. His name regularly appeared in Forbes' estimates of personal wealth. He was said to own around 100 palaces, luxury yachts, and to have a fondness for gold bathroom fixtures. His personal fortune was estimated at no less than $10 billion, distributed across numerous offshore arrangements. Even that was regarded only as a cautious estimate. Despite his reputation as a brutal dictator, Saddam allowed part of the oil revenue to circulate within the country. His own money, by contrast, was preferably kept in the West, as was customary among members of his profession. Saddam even invited Western inspectors into Iraq to search for weapons of mass destruction. They found none. After 2 wars that had clearly ended in defeat, it was also evident that the Iraqi ruler no longer represented a serious military threat. Yet precisely this weakness made the country especially vulnerable. In international politics, a weak ruler sitting on vast oil reserves is apparently a problem that can be solved with remarkable ease. The public justification for the invasion sometimes had comic features, had the outcome not been so devastating. One important element was a report by the New York Times about an intercepted shipment of aluminum tubes intended for Iraq. With enough imagination, the argument went, such tubes could be used in a nuclear weapons program. Colin Powell, then United States Secretary of State, showed corresponding slides to the United Nations Security Council. The small vial of white powder that he presented during the meeting also became famous. It was intended to illustrate the danger that anthrax spores could pose. The United States later had to admit officially that Saddam Hussein possessed neither the alleged atomic bomb nor the biological weapons that had been described. By that time, the regime had already been overthrown, Baghdad lay in ruins, and American soldiers were stopping trucks full of gold at checkpoints. Saddam Hussein himself seems to have had little doubt that the American operation would succeed. 2 days before the attack began, on the night of March 18, 2003, 3 trucks pulled up outside the Central Bank of Iraq. Qusay Hussein, the younger son of the dictator, who was regarded as the more self-controlled of the two, was sitting in one of the vehicles. He headed the Iraqi intelligence services and commanded the Republican Guard. Everyone at the bank knew him. He did not need identification. He brought only a letter from his father, almost as simple as a note sent to a school. It instructed the bank to hand over $900 million and 100 million euros in cash immediately. No one objected. The real problem was the sheer bulk of the money. For 5 hours, bank employees and soldiers in the silent capital, waiting for war, packed iron chests and carried them to the trucks. $1 billion in $100 bills weighed roughly 10 tons, or a little more than 3 tons per vehicle. Shortly before his fall, Saddam Hussein thus became the greatest bank robber in the history of his own country. Another billion was now added to his already estimated personal fortune of $10 billion. His provisional total, therefore, stood at $11 billion. A few days later, an out-of-control crowd looted the Central Bank of Iraq and burned the building down. Qusay Hussein and his brother Uday hid in a villa in Mosul. An informant revealed their location for $30 million. Both were killed in a firefight with American special forces. Some of the money removed from the central bank was later recovered. On April 20, 2003, American soldiers occupied one of Saddam Hussein's presidential palaces. Behind a wall that had been broken open, they initially discovered a chest of cash. The palace was then searched almost stone by stone. In total, another 163 chests were found. They contained $662 million. $338 million of the billion was therefore missing. What happened to it was never established. Stories still circulate in Iraq about caches of money in Baghdad basements or chests supposedly buried somewhere in the desert. The mystery surrounding the rest of Saddam's fortune is even greater. The cautious estimate was $10 billion, while other sources spoke of as much as $40 billion. When Saddam was captured in December 2003, soldiers found only $750,000 in his hideout. For a man associated with wealth of that scale, this was barely more than cash for current expenses. According to reports, he refused during interrogation to provide information about his accounts. It is rather unlikely that these conversations were conducted with particular gentleness. Part of the fortune may have reached his daughter, Ragad Hussein. She found protection in Jordan as a personal guest of the Jordanian king. Saddam's second wife, Samira Shahbandar, is considered another possible heir. She disappeared without a trace and, according to unconfirmed rumors, is said to be somewhere in Beirut. There is also an especially wild version of the story with a trail leading to Moscow. At the beginning of the 2010s, media outlets reported a rumor that at least $26 billion from Saddam's fortune was being held in a warehouse at Sheremetyevo Airport. The money had allegedly been brought there from Frankfurt in 2007 but was never collected. No evidence was presented. Saddam himself could provide no later explanation. He was executed on December 30, 2006. After the invasion, the American Occupation Administration first secured the oil fields and brought them under its control. The oil-for-food model was then radically simplified. The food disappeared from the arrangement, as did the previous European financial intermediaries. Oil continued to flow out of Iraq, while aircraft carrying pallets of banknotes flew to Baghdad in the opposite direction. The new mechanism was called the Development Fund for Iraq. Officially, it was intended to finance infrastructure projects and the country's political stabilization. In practice, political stabilization often meant using money to bring local politicians and tribal leaders onto the desired side. A little more than $18 billion was initially available for this purpose. There was no shortage of money. After the attacks of September 11, 2001, the United States government had greatly expanded the money supply, while Iraqi oil obtained on favorable terms by the victors of the war had very real economic value. The aircraft carrying cash were not a metaphor. Once or twice a month, a Hercules military transport aircraft landed in Baghdad. Pallets of freshly printed banknotes wrapped in plastic film were unloaded from its cargo hold. During the first year after the invasion, the United States brought a total of 281 million banknotes into Iraq. Together they weighed 363 tons. This enormous quantity of almost uncontrolled cash entered a country that was effectively living in a state of anarchy. The result was predictable. The money began to evaporate. Iraq's climate is hot, but apparently not only hot enough for water, dollars also disappeared or stuck to people's hands, and this happened at almost every level. On one occasion, $700,000 vanished overnight from the safe of an American division. Paying contractors with a sports bag containing several $1,000,000 was not considered unusual. An accounting record from 2004 included an expenditure item of $500 million, with a note saying that the details would be clarified later. Apparently, $500 million was not a sum worth unnecessarily interrupting the administrative process over. Shortly before the end of the transitional administration, millions were quite literally placed in the hands of employees and Iraqi partners, accompanied by instructions to spend the money while it was still available. The Coalition Provisional Authority, which governed the country until authority was transferred to Iraqi institutions, naturally had an accounting system. A large, experienced, and respected audit firm could have been hired to review it. This idea was indeed mentioned and apparently rejected as excessive. Instead, the contract was awarded to a largely unknown consulting company registered at a private house somewhere in San Diego. The organizational conditions for a financial feast were thus in place. Major reconstruction contracts with a total value of about $3 billion went to Bechtel, one of the largest construction companies in the United States, and closely connected to the administration of George W. Bush. Bechtel's board included, among others, former Secretary of State and presidential advisor George Shultz. Through one of those coincidences that regularly appear astonishingly well organized in Washington, Shultz had actively supported the war against Iraq. The situation was similar with Halliburton. The Oilfield Services Corporation also received contracts in Iraq worth billions. Dick Cheney had headed the company until 2000. He then became vice president under George W. Bush. The connection was therefore neither especially hidden nor difficult to explain. It simply had to be treated as normal business. The list of further examples could continue for a long time. The new Iraqi authorities readily approved most decisions, especially since the American side was not stingy when paying influential intermediaries and local partners. To impose at least some retrospective control over these events, the Office of the Special Inspector General for Iraq Reconstruction was created. Stuart Bowen took on the role. He was required to report to the United States Congress and submitted a total of 35 reports. His conclusion was remarkably clear. Of the $20 billion spent through the Coalition Provisional Authority, all $20 billion had been used without proper accounting. In polite official language, this meant missing documentation. In less polite language, it meant that no one could convincingly explain who had received the money, what it had been spent on, and what portion of it still existed at all. This sum does not even include the indirect benefits of the war: profits earned by arms manufacturers, revenue from reconstruction contracts, changes in oil prices, proceeds from Iraqi oil, and access to the country's other resources. A comparison of the known orders of magnitude therefore produces an unusually clear ranking. The United Nations comes in third with the billions believed to have disappeared from the Oil for Food program. Saddam Hussein takes second place with his estimated personal fortune, offshore accounts, and the billion removed from the central bank. First place, by a wide margin, goes to the American Occupation Administration. Saddam may have possessed more hidden wealth in total, but he ruled for 24 years. Spending $20 billion in cash in only 14 months without adequate accounting requires a different kind of organizational talent. Adjusted for inflation, that amount would correspond to roughly $40 billion in today's terms. Judged by the speed at which money was destroyed, the Occupation Administration was therefore almost impossible to surpass. A consolation prize remains for unidentified individuals in Iraq's later state leadership. In 2022, $2.5 billion disappeared from the country's own treasury. The method was simple and elegant. Unclaimed tax refunds had accumulated in an account. The money was withdrawn with the help of forged checks and companies established at short notice. Exactly who was behind it could not be determined with certainty under the country's now democratic order. The former prime minister accused the new one, and the new one in turn accused the former. Thus, the story of Iraq's riches did not end with Saddam Hussein, with the United Nations, or with the American occupation. Only the administrators, the justifications, and the account numbers changed. The money itself retained its most striking characteristic. As soon as it was administered in the name of the Iraqi people, it became astonishingly difficult to find.